For years, if you said Japan's property market, most people would think, well, stagnation. But if you look closer right now, the ground is literally shifting. We're about to dig into some surprising data that shows a whole new growth phase is kicking off for Japan's construction and real estate worlds. So, the big story for 2025 is that the market is waking up in a major way. And no, this isn't just a tiny little bump. We're talking about a significant shift. You've got a weak yen making Japanese property look like a bargain to the rest of the world. Tourism is absolutely roaring back, and a ton of domestic investment is pouring fuel on the fire. So the big question is, what's really behind all this? What's driving this incredible turnaround? Well, we're going to follow the money and take the pulse of the business world to see what this means for everyone, from homebuyers in Japan to global investors looking for their next move. All right, first up, let's zoom out and really understand the big picture here. And now for the really fun part, let's follow the money. Okay, here it is, the headline number. For fiscal year 2025, we're forecasting a massive 76.7 trillion yen in construction investment. I mean, that's a jump of nearly 5% from the year before. This number right here, this is the engine powering the whole boom. But, where's all that cash actually coming from? Well, if you look at the breakdown, the two biggest pieces of the pie are government spending and private non-residential investment. So what does that mean? It means public infrastructure, new factories, and huge warehouses are what's really driving the growth. And this is a super important point. This is not your typical housing boom. In fact, residential investment is actually slowing down a bit. There was a big rush to build in 2024 before some new energy standards kicked in. The real story in 2025 is all about big corporate projects and public works. Those are some huge investment numbers for sure, but is the confidence actually there to keep this momentum going? I mean, are companies really feeling good enough about the future to keep spending like this? Let's check the vibe on the ground. To do that, we turn to the Bank of Japan's Tenkan survey. Think of it as a giant mood ring for the business community. It's super simple. Any score above 0 means the optimists are winning out over the pessimists. And as you can see, the mood is pretty darn good. Both the construction and the real estate industries are well into optimistic territory. And this isn't just wishful thinking. It's backed up by solid plans for capital investment, especially from manufacturing and tech companies. So the next couple of years are looking strong, no doubt. But what happens after 2026? That's where things get really interesting because the market could go in some very different directions. You can really boil it down to 3 possible futures for Japan's market. There's the most likely path, then there's a high-growth boom scenario, and of course, a potential downturn. Let's walk through them one by one. First up is the base scenario. This is the most probable path. Think steady, not spectacular. We're talking about growth holding steady around 2% a year, mostly pushed along by government projects and corporate money flowing into green technologies. In this future, housing prices creep up slowly and office rents stay pretty stable. Then we have the optimistic scenario. This is the whole inbound boom story. This is what happens if the weak yen keeps pulling in tourists and a flood of foreign investment. Here, growth could really take off, surging past 4%. You'd see commercial land prices in big cities jump, and the market for luxury hotels and condos would be on fire. But of course, you always have to look at the downside risk. In the pessimistic scenario, the main trigger would be the Bank of Japan raising interest rates. That makes borrowing money more expensive, so companies might pull back, and the housing market could enter a correction. This is the future where the market actually shrinks. Okay, so we've looked at the numbers, we've explored the possible futures, but what does all of this actually mean for you? The takeaways are pretty clear, and they really split into 2 groups. For home buyers here in Japan, that window of super low interest rates might be starting to close. 2025 could be a really strategic time to buy, but you absolutely have to plan your finances for higher rates down the road. Now for international investors, the weak yen is basically a massive discount coupon, creating a pretty rare chance to snap up some high-quality properties. So for those investors, where's the smart money heading? Well, the data is pointing to a few key areas. First, hotels and commercial property in big tourist cities like Tokyo, Osaka, and Kyoto. They're directly benefiting from the travel boom. Also really attractive are those top-tier grade A office buildings in central Tokyo for stable income, and of course logistics centers, which are just riding that massive e-commerce wave. So when you boil it all down, it comes back to this one core idea. The next 2 years are set for some really solid growth. And it's not some kind of speculative bubble. It's a recovery being built on a firm foundation of government and corporate investment. So yeah, the foundation for the next 2 years is pretty much set. Japan's market is building once again. The only question now is, which one of those futures will it choose to build beyond that? And of course, just a reminder as we close out, this analysis is based on public data as of October 2025, and it's definitely not a guarantee of how the market will perform, so always do your own research. Thanks for tuning in.